This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, October 13th. Starting out with the stock index futures, we are seeing prices a little bit lower this morning. This mainly due to news that we did have some weaker Chinese economic data. Also, we are seeing relatively light volume though on the weakness, and I'm inclined to think that we will see some recovery today. And I would not be surprised to see a move back to higher on the day in stock index futures. Longer term, though, we do believe that even though there are signs of a stagnating global economy, that the central banks around the world have plenty of stimulus left to support the global economy, and that would include the European Central Bank, the Bank of Japan, and I think the Fed is going to back off from its hawkish rhetoric. The Bank of England will probably do the same. So more stimulus sooner or later will ultimately rescue this stock index futures market, and we continue to believe that we will see some new historical highs for the major indices next year. Now, moving over to the foreign currencies, the dollar index once again seems to be underperforming the news. Although the dollar index a little bit better, I would think that it should be substantially higher in light of weak economic numbers out of the Eurozone and weak economic numbers out of the UK. So the dollar continues, I believe, to underperform. So this still looks like the main trend is lower for the dollar index. Also, we are seeing the euro currency a little bit better, even though German investor confidence coming in on the weak side. Also, we are seeing the British pound sharply lower after UK inflation numbers coming in at a negative 0.1% on an annualized basis. That compares to the estimate of unchanged. So we have to ask ourselves the question, how can the Bank of England raise interest rates as they have threatened to do from time to time with a negative inflation rate? I believe that can't be done. So do not look for a rate increase from the Bank of England anytime soon. Also, we are seeing the Australian dollar coming under a little pressure. This also due to the Chinese economic numbers that came in on the weak side, and this snaps a 9-day winning streak for the Australian dollar with sharply lower prices today for the Australian dollar. Now, moving over to the interest rate markets, we are seeing the long end of the curve holding up relatively well. The weak Chinese data supportive to treasuries, also lower stock index futures, a bullish factor. Longer term, we believe that the long end of the curve, especially the 30-year bonds, will trade higher as the Fed refrains from adding any type of move toward higher interest rates. So they refrain from a rate increase. So that would be bullish for the long end. Also, we do believe that while the consensus view is that the Fed will raise next March, our feeling is that the FOMC will not be able to raise then, and that, of course, would be bullish for the long end of the curve. So, once again, these are my opinions alone, and they are not the opinions of ADMIS or Archer Daniels Midland, and good trading, everyone.